SiriusXM has really gotten to know Pandora really well since that initial investment, Andrew. My guess is that they've been impressed by some of the near-term execution by the Roger Lynch and the existing Pandora management team, and as they look at it, as they look at some of the strategic synergies, the world that we live in, where aggregation of users is strategically important as you try and combat the likes of Spotify and Apple and even Amazon and Alphabet. Scale matters, and so they know the management team, they know kind of the P&L in a way that others are going to take a while to get to know,
Anthony,
and so it does make some sense at a high level.
Talking about those other tech giants that you just mentioned, there is what's known as a go-shop provision as part of this transaction, which effectively allows Pandora to try to find another buyer willing to pay a higher price. Effectively, this transaction puts a floor now on Pandora's stock price. Can you imagine an Apple and Amazon or any of the other tech names that you just mentioned trying to step up with a higher bid?
I certainly wouldn't rule it out, and you're right in that another buyer can emerge here. It's my sense, and I'm not sure, though, that Apple and Spotify have had a chance to look at Pandora already. So I'm not sure the go-shop period is a very kind of new development. I think because Pandora is unique in that it's not profitable, it's not clear that it will be profitable in a short period of time. I think it will take a buyer like Spotify or Apple to get to know the financials, and that takes time. And SiriusXM management team, I think, because of their ownership stake, they've gotten to know the team and the financials in a way that a new buyer has not. I mean, that said, strategically, you can see the benefits of scale. I mean, the music market, the audio market is going to this on-demand market. If there were three buckets, a la carte, ad-supported, and subscription, consumers want subscription, on-demand,
Anthony,
anywhere, anytime.
Real quick, because we got to go, but SiriusXM stock price looks like it's going to open off about 5% this morning. Obviously, there's some ARBs already in this stock, but when you look at that, does that mean that they're paying too much?
I don't think so. I think that there's dilution there because Pandora is unprofitable to begin with, and Sirius hosting a call here, and they'll lay out the strategic synergies. And so, I think it's going to take a little bit of time here for the market to understand what are the synergies. Is it negotiations on the content side? Is it getting Pandora in the car? Is it better leverage in terms of negotiations with the content owners, like the record label? So, I do think, once the market kind of gets a better feel for what the strategy is at the SiriusXM level, then we'll start to see the stock normalize.